Hello everybody, welcome to Street Smart Investing. I'm your host Albert, and this is the second video of the banking services sector. The next one that I had on my list, again, this is not in a particular order. The next one that I had on my list was EVBN. So let's begin. Let me double check that. 1, 2, 3, 4, 5. Yep, EVBN. So we have EVBN. The 1-year chart looks good. Three-month chart looking good. Analysis. Not too bad. It's been going up. Let's look at the 2020 numbers. So let's change this to the annual. Change that to the annual. Revenue is good. Net income, that's typical. Profitability, yeah. Yep. So this company, not too bad. Not too bad. And another thing I want to watch out for is shorting potential. If this amount of shares that people want to short, if it keeps growing, and the amount of days that it takes them to cover their short position. The longer the days, the worse it gets, because that gives them more time to wait it out and come together with a better strategy. So I definitely don't want to look for that and have that. So I would say yes, this stock is a good stock. EVBN pays dividends, and let's see the list. It is pretty good. Okay, so they pay in March and September, and they're pretty standard. What I mean by that is basically they pay twice a year, almost on the same exact date. They always pay in mid-September and mid-March. So they're pretty accurate. And again, no splits, which is good. And it's a pretty good stock. Let's go to the next one. Next one, we have CBTX. CBTX. Let's look at the 1 year. It's been going up. It's been dropping down. Not bad. Buying the last few days. There's some buying. Analysis. So no, it's been up more than it's been down. So that's good. Always look for something that looks like more of the majority. Let's look at the 2020 numbers. Hopefully they have them. Yep, they do. Let's look at 20 numbers, 2020. So they dropped there. Profitability. That's low. Return. So let's look at the numbers. Have they beaten earnings? Yes, they have. They don't have the margins. That's pretty typical. So income statement. Net income and revenue. Operating income doesn't show. See, and honestly, this is why I don't like the banking sector, because they have high debt. I just don't like that. I don't know. It feels like, I don't know, they might just go bankrupt one day, and that's it. You just kind of lose it all. You're on the short end of the stick, and that's it. Bye-bye. Your money's gone, and there's no way around that. That's a part of investing. So let's look at the cash flow. 304, 429. So they do have positive cash flow, over 100 mil. That's not bad. For this stock, I would say it's pretty good. I mean, it's not the best, but it's okay. So these two are okay. Next up is PLBC. So let's look. Oh, they do pay dividends. I like that. I like the chart, the 1 year. 3 month looks good. Yeah, overall for the year, yeah, it looks good. Let's look at the analysis. So, yep, it's been going up. A lot of buying the past few days. So, short interest. So that means people want to short it. It's been going down. The amount of shares have been going up though. So that's not good. Oh, right here it's been going down. So maybe in 2 more weeks I'll look at the next bar and see how it is. Because this gets updated every 2 weeks. Or maybe even a month to be certain. See June 30th. 1 day to cover. Good. Let's look at the 2020 numbers for this one. Not bad. So profitability 2.76. That's pretty decent. ROE 15. Press release. I do not like that just because of the split. So I'm going to say no. I would not invest in this stock. And they're a bank. What else can I say? So they have the split. The short interest is pretty risky as well. That's why I wouldn't do it anyway. Even though that they have acquired a new bank, I guess, or something. But nope. Just don't like it. Look at all that selling the past few days. Yeah, it's pretty tricky. Nope, that's a big sign. That's a big no-no. It's a big no-no. Institutions, retail investors. Let's look at the institutions. Held, increased, decreased. So the majority have decreased. But it doesn't tell me when and what amount of time. That's updated, right? But okay. There we go. The people that decreased. Yep. So there we have it. There we have it. PLBC, I'm going to say no. So there you have it. So the last two that I have, GNTY and FFBW. GNTY. Earnings looking good. PE, not too bad. Let's look at the 1 year chart like I always do. Boom. So it went down. That was a good time to buy. And then went up. So it's going down again. It's not too bad to buy. So the 1 year chart, it looks like it's following the 200 moving average. Three-month chart. So yeah. Some buying in the last few days. GNTY. Analysis. Support and resistance. So if it could drop a little more, that would have been a good time to buy. Let's look at the 2020 numbers. Looking good. So this is a bank actually, GNTY. So they have been increasing their dividends. What are their payouts? Quarterly. They pay quarterly splits. Any splits? That's good. No splits. See that. So far, so good. I would say yes. This is a good company. If they're beating earnings, that's good. Is that about the same? Return on assets are pretty low. But their earnings keep going up. That's not bad. I don't have margins. That's awful. That has been getting higher. So this company's not too bad. Even though I'm missing some info, it doesn't seem too bad. Yeah, banking system always seems to prosper. The majority of them, I'd say. So GNTY Bank Shares, that's the name of the company, GNTY. There's a lot of thunder out there. Next up, let's look at the next one. Let's look at the last one. Last but not least, FFBW. This is a very cheap stock, very, very tricky. It's gone up. Good. Now it's kind of like flat, which is pretty good. Not bad when your chart. This is actually a good one for trading, obviously, because it's a cheap stock. Long term, to hold this over a year. Let's see. I'll decide now. There has to be some kind of news to drive this price. I don't see any news that's like positive worthy. That'll just, you know what I mean? Nothing news shocking. It's positive. Everybody's like if, ands, or buts about it. They are earning. They're not paying a dividend, which I understand. That's not too bad. As long as they can grow. Short interest, not too much. Not too many people shorting it, which is really, really good. They have shorted it before, but I mean, you know, not too much interest, which is good. Yeah, give me a minute. All right. Let's look at the 2020 numbers. So again, FFBW, that is the ticker symbol for the stock. Revenues are going up. Net income, that's really, really good. You want that to grow every year. So, ROE, operations, debt paying. This is a really good company. They've been paying off debt. So far, out of the 10 that I've reviewed, this is actually the best one just because of the debt. They're trying to pay off debt, which is really, really good. That'll allow them to grow. Like I said, I don't like companies that are high in debt, and you hear me say that in plenty of videos. Yeah, like the other banks are okay, but if they're lowering the debt, that's definitely a good sign. So there are Federal Bank of Wisconsin. Oh, it's a big mix. Others, insiders, corporations, and institutions. So let's look at the financials again. So it looks like a good